What's up YouTube, it's Rob with Rob in the Market, and we're back with another video. This week I was actually doing pretty good. I'm up 3,600 for the week. You can see I have a lot of buying power right now, $10,000, and that's because I was forced to sell a couple of my stocks because of my call options. And like I've said in past videos, that can happen sometimes if you set your strike price too low. I'm never really too concerned about it because no matter what, I always set it where I'm making profit either way. You can always make more profit if you set it high enough and you don't lose it, and you can keep doing it over and over again. Or what I like to do, I just buy it back if it drops back down. So Workhorse, I sold it for $25.50. That's what I set my strike price for, so I was forced to sell it. It doesn't even show in my history. Oh well, doesn't matter. So yeah, I was forced to sell it. Technically I lost like $60 because I sold it at $25.50 and it's at $25.80. Not a big deal. I will buy it back at $25.80, or I will buy it back at somewhere in the 25 range. Hopefully it goes back down to $23 and then I can really buy back. And then the other one I sold was NIO. NIO actually took a little bit bigger of a loss, or not a loss, but I just didn't make as much profit as I could have because I sold it at 50 and it's at 59 now. So technically I could have made another $900. NIO, honestly, I don't see NIO going back down to the $40 range because NIO day was today or yesterday. I can't remember, sorry, but from what I heard about it, they had some pretty good news about their batteries and all that, so that's why the stock jumped, and it'll probably stay in the $50-$55 range in my opinion. I could be wrong, you know, some bad news can come out about NIO and it drops back down to the 40s, but I just don't really see that happening now. Do I plan on rebuying NIO? I do love NIO's options and how much they pay for options, but NIO is kind of pricey right now. I can get $348 if I do a sell call option for NIO at a $61 strike price. Yeah, I might buy it back. Get $350, you know, in 1 week. It's not bad. But the thing I'm worried about is NIO is very high right now and it could drop back down. I only got $10,000 buying power. And I want to try out some new things this week, so I'm gonna gamble a little this week, guys. So wish me luck. What I plan on doing with that $10,000 buying power. So first thing I will probably do is buy back at least 100 shares of Workhorse, because I still feel like Workhorse might get that UPS contract. We'll know within the next month or two if they're going to get the contract or not. And that's if they get it, or even if they get a portion of the contract, they don't have to get the full contract. Even if they get a portion of it, you'll still see this stock shoot up a lot more. You know, the reason this stock shot up in the last week $5 is because they got a different contract, not with USPS, but with some other company for like 6,000 vehicles, a little over 6,000 vehicles. It's a 6-year contract. You know, they have 6 years to deliver the 6,000 vehicles. So, you know, that's steady income for them for the next 6 years. So that's why the stock price went up. A lot of people have more faith in Workhorse now and are willing to buy it again. So that's why the stock jumped. Just want to touch on IDX. I remember recommending this in one of my earlier videos. So like you see, it has come back up. It was down for a bit and now it's back up. So hopefully nobody got scared with this one and sold too early. Yeah, I always say just, you know, hold it and, you know, see where it goes. So like I said, I'm gonna probably buy 100 back of Workhorse, do some options with Workhorse. I might buy another 100 of this one. So that'll be around $600. So about $3,000 there between those two. And then a new one that I might do because NIO's too expensive for me now. I might buy 100 shares of Xpeng, another Chinese electric car company that's doing pretty well. Honestly, I like NIO a little bit more, but they're cheaper, more in my price range. So I might just go with Xpeng. and they're still paying a pretty good premium. So yeah, they play a pretty good premium. I don't mind buying at $45. I know that they were at like $60, $70, even $80 2-3 months ago, and they probably can go back up to that price again eventually. I don't know how long it will take. It doesn't really matter to me. I'm going to be using this stock for options trading. I'll probably buy it at the $45, excuse me, sorry, little tongue tied there. I'll probably buy it at the 45.54 price, whatever price it's at now. I'm sorry, guys. And set it for a $48 strike price and make $155 for the week. So that's probably what I'll do on Monday when the market opens. That's one of my plays. So like I said, I'm going to try something different. So the workhorse, buying another 100 of this and doing another call option with it, because I'll have 200. That's nothing different or new. You know, you guys have been seeing me do that for a while now. But this one has pretty good premium. I'll probably set it at an $8 and get $85, which will close next month, February 19th. I'm fine with that. Make good profit. Whether it sells or not, I'm happy. So what I'm going to be doing new, though. Now, this is the risky part. And, you know, some of you guys are following along what I do, and some of you guys are just watching, learning. And this is going to be a learning curve for me, too. I might take a loss on this, but I might potentially gain a whole lot. So I got some buying power. I'm willing to do a little gambling and risk this. Let me just show you what I'm going to do. Let me just show you. So I usually sell call options. I'm actually going to buy a call option. And yeah, I'm going to do it with this one because it's slightly cheap. I'm going to go to January 21st, 2022. So I'm going a year out. And I'm buying a call option. And I'm thinking about doing it for a $4 strike price. So if it goes over $4 by January 21st, 2022, I have to buy the 100 shares at $4. Right now, the stock price is at $5.83, right? And I'm paying $350 for this call option. I'm paying them. I'm not getting the premium this time because I'm buying. So, and you probably are wondering why I'm going under instead of over where it's cheaper. That's where this is going to get interesting for me. So I have a whole year. If it goes past, you see there, sorry. If it goes past the break even, $7.50, every penny after that, technically I'm making $1 profit, right? So I'm just betting that it'll go over $7.50 by January 21st, 2022. But here's where I'm going to really play with it a little bit. Even if it doesn't go over that price, as long as the stock keeps going up, I can resell the contract back. I don't have to exercise it or wait till January 21st. I could sell the contract back early. Let's say the stock jumps $2-3, and instead of it being $350 for this contract, it might jump up to $500 for this contract. So what I do then is I just sell the contract. I take my $150 profit, and I can actually just buy 100 shares of the stock at that point, probably. So that's something I'm gonna do, or I might just hold it and let it, you know, run for the entire year. And like if I really see this stock like double, I'm just gonna hold it for the whole year and see how much I can really make off of the contract buying it. But I'm still going to be doing sell options with this too during that whole year with the 200 shares I already own. So like right now I already have an option with this one, Microvision. If you guys haven't done your own research yet and looked into it, they're pretty much making cameras for electric vehicle cars to help with the self-driving features. This one has a potential, in my opinion, that Tesla might use their technology in the future, or you know, just any other EV electric car company. They might, you know, adopt this technology because, in my opinion, it seems pretty good. So I got $45 for this $6 strike price. And if it goes over $6 by January 15th this year, I have to sell my 100 shares. But I own it at 508. So I'll still make $92 profit plus the $45 premium that I made when I set the contract. So either way, if I sell it, I'm making profit. If I don't sell it, I just do it again for the following month. But I'm going to buy another 100 shares when the market opens Monday, so I can do 2 contracts a month instead of 1. So yeah, those are my plans for the week. For next week, I am going to be risking it a little bit with the whole buying a contract instead of selling it. But I'm doing it a year out, so I have plenty of time for this stock to hit 750, whereas my break even, and I can start making profit after that. And honestly, this stock has been doing pretty good in the last month. It's gone up $3 in the last month, so I'm not really too worried about it going up another $3-4 in the next year. I feel good about this one, so I'm gonna and really, when I'm doing that, I forgot to mention this part. When I'm doing this, the buy for next year, all I'm risking to lose is this $350. That's all I can lose. Whether, like, by the expiration date, if it doesn't go over $4 and I'm not forced to buy the shares, all I'm losing is the $350. So, yeah, I mean, to some people that is a lot of money. I mean, technically I don't want to lose the money, but I feel like it's worth the risk. The potential gain is a lot higher than the risk of what I'm losing. So that's why I'm going to take this, and it's also going to be a learning curve for me. So I'll keep you updated and let you know how that goes for me. If you keep watching my videos, you'll see it anyways. So I hope you guys enjoyed the video. Please comment down below if you have any questions or comments, or let me know if there's any stocks you want me to look into and do my own and do some research on. I appreciate your opinions. Yeah, and just so you all remember, I am not a financial advisor. I am just showing you what I'm doing and giving you my own opinions. I could be dead wrong. I could lose money in these next plays that I make this next week. Yeah, there's always that chance of taking a loss. So just be careful. Please do your own research. And with all that being said, I'm Rob. This is Rob in the Market, and I hope you all enjoyed. Have a good one.